Hey, what's going on, guys? Hope everyone had a great weekend and was able to break away from the charts, spend time with family, do side hobbies, whatever it is that you guys do outside of charts. I feel like that's very, very important and vital to success. So hopefully you guys were able to escape a little bit. But really just a good week in the market. I feel like overall the past month's performance has been spectacular. I've been really consolidating things down to two or three concentrated ideas and going heavier with my size. Anything that I'm not super confident with or that's outside of like my top three focus, I've been just grabbing starters on them, closing if necessary, taking profits if necessary, or rolling if it starts to look better. Really, you guys can, off the top of my head, AMD has been spectacular. Palantir was a fantastic short. Spot trades on SPY QQQ to the long side or short. Obviously, still in some drawdown there on the SPY Januaries, although I still have been very transparent. I have 8 contracts on those, so down about 9-10 grand on that, and I've been very, very open with that. And then obviously, I've talked about this. I had 2 months where I was really struggling as I started to see signs of distribution occurring. We can argue that I took positions that I didn't need to take in the early phases of that distribution. And you guys know, right, during April, during that whole bottoming event, I had a lot of contracts and, I took a lot of it off too early. But for the most part in April, I made about 35 to 42,000 and then trying to time the tops, whether it was the AMD trade, the first go around, or Meta, a couple other shorts, and then obviously the one I'm currently in, the SPY drawdown. All in all, I was down about 15 to 16K, right? And I've talked about that. I gave back half of my April profits, and that can really trickle into a spiral effect where I can give back all those profits, especially if you start reaching around and grasping at straws, just finding whatever can work, or then trying to chase these highs, right? You can get caught in some pretty bad situations, and I just try to stay patient. Like I said, really consolidate things down, and we really found a nice little niche here, right, with our longs in UNH, spot trading, data sets on gap downs or gap ups, right, using SPY or QQQ, and then really focusing on the AMD distribution. Still had something with Meta that I thought I saw. It worked out one day, kind of got back to break even, and for the most part, that hasn't really done much. But overall, right, just have really, really good ideas across the board that have really just been around UNH, AMD, Qs, and I think we have something else setting up here on NVDA. I'll talk about that here shortly. But yeah, that's kind of the name of the game right now, man. Just seeing these charts, having high conviction in the distribution, or as you guys remember last week, the NWOG accumulations, and knowing what these setups are because we trade them so often. And then when they finally present themselves, going in heavy has been what I've been doing. Adding into them when necessary, letting things play out from a daily perspective on my stop losses, or letting obviously if you guys should know this, but letting the daily candle close. If it's a longer outlook idea, get some flexibility for a weekly candle close. And then, yeah, trimming into strength has been massive, right? We kind of know if we have been playing short side, which, hasn't been too great, right? I'm not going to lie. It's been really hard. I feel like every single down day or big down day is followed up with a V-shaped recovery. It makes a new high, and then it sells back down underneath that high. And it's just been really stressful. So for the most part, I've been trimming into strength on the downside. For anything long side, I've been really trying to position myself around the EMAs, right? Trading, if it pulls back into the EMAs, I'm looking for that. And timing it around OPEX, right? And that's going to be the center focus of this video. Really looking at Vana charm flow, right? Just overall flows returning into the market at the beginning of the month, and specifically going into that 2-week period leading into an OPEX, right? Remember, we've been talking about this little window of weak. It's not really a window of weakness. It's just a window of non-strength where something could happen, whether it's a data set that comes out, a hot CPI print, jobs numbers, FOMC, whatever it may be, right? Some kind of bad data set. Maybe it's an earnings, maybe it's geopolitical, something that can basically affect the market to where it can sell and it doesn't have supportive flows coming from market makers that can lift up price, right, and stop what could be a nasty sell-off, right? That's kind of what that window of weakness or non-strength technically is. We had a couple events occur and we saw some slippage in some names, namely AMD, right? This obviously had a nice little sell-off here, and I think enough damage has been done where I still want to keep this on watch, but obviously I trimmed into this breach here underneath this 153.12 to 153.75, and I'll make these both green so it looks a little bit prettier. But the reason I have not just this gap here, where there's a clear gap fill on the 7:15 day, but I kept this in place as well, right? This is from back in October 30th. This was that big gap fill that we were looking for this to breach, and then obviously I didn't think it would sweep over, and that was the stem of one part of my thesis and why I lost that first go around. But this is still a big part in the chart, and obviously it coincides now with this gap from back on 7:15, right? So I just have like these two lines here as support. And I had this little line here as well from 8.6. This was kind of like an internal higher low, right? So we kind of had this low here. We pushed out, we pulled back down. We obviously bounced just before this, so internal higher low. We pushed out, we made a higher high, but it failed. We pulled back down. We bounced off of this internal higher low. We had a lower high or a bear flag, whatever you guys want to call this. And then we broke the trend line. We retested that gap here at 162, and then we broke down, right? So we now went from an internal to an external, and I trimmed as we broke into the external low, right? So really easy. 153.75 was the gap. I trimmed into the gap, to put it very simply. Now, right, I obviously add into this position. I would love to have a gap down into this 146. I think that would be picture perfect. But this is where I want to tie everything into a nice little bow, right? We are going into September 8th, and I've been talking about September 8th a lot. If you guys know the importance of September 8th, awesome. You guys have been keeping track of things. If you guys don't know, right, this little red line here is our OPEX, right? So you guys should see 919. That's a very, very big monthly expiration. And this is usually a seasonally weak period for the market. And you guys can historically go back and look at September's performance. It traditionally isn't that good, right? We either have a larger correction or a small correction, but inevitably it typically finishes red. But the most important part here is we do see front running for that year-end move, right? The Santa Claus rally or the January effect. A lot of this often begins off of September's weakness, right? And it's typically accelerated, as we always talk about, by market makers and dealers positioning. That's built into that December OPEX and that January OPEX that are constantly lifting the market up or giving it that supportive flow. And then on top of that, right, it's a confluence of multiple things. You can talk about institutional activity. We should all know that during the summer is very, very low in volatility. It's a slow grind up. A lot of people don't really look to be buying into those highs. So a lot of institutions actually take off the summer, and they end up coming back and buying off of that September weakness, no matter how big it is or how small it is. You have to think about from an investor psychology standpoint. A lot of people simplify it and are just looking for the Santa Claus rally, and that's all that's going through their mind. So a lot of people will start to position early for that. Right? And a lot of people view this as like one of the last pullbacks before you end up getting that major driver at end of year. So all in all, there's a lot of different reasons for that, but all of this is really picked up off of that September sell-off and has accelerated, I would say, by the end of September, but it starts into that OPEX period, right? So taking a look at this, right, I want to go back to what I said. 919 is OPEX. We basically have a week out, right? It's technically 10 days, but 7 trading days, right? You got to take off those 3 for the weekend. So we're going into a period now where I would be looking for a gap down, right, to kind of finish this weakness. I would love to see 146 on this. And then from there, right, looking for a pop. Now, I still want to short this name. I know this might be kind of crazy, but I want to short this, but I would want to be taking off a bulk of my position. I added, obviously, on Friday. I still have some of my position from those December contracts as well. So I have 2 different positions on AMD, but I would love to see a finishing move for this to come down to 146 and then a rally into the OPEX. You guys got to remember, Vonacharm support the price action into that OPEX, right? So we were looking for a 1-week rally going into 919. This could just be a lower high, so that's really what I'm looking for, is a push back up into this 153.75 spot. Maybe it trickles a little bit higher into that 157 spot, and looking to short this one more time, right? And then looking for a breach under 145, retest 145 if it even does that, and then looking for fulfillment down into 138, right? So this is what I'm looking for. Same thing for another chart that's very, very similar is NVDA, right? NVDA kind of has a scary look to it. If I'm not going to lie, that's good for shorts, obviously. But I'm not a big guy of this, but this does look like a Head and Shoulders. If I'm being completely honest, just looks very, very strange. It looks topped, right? This looks like it obviously just did a little 3-bar bear flag. And then if you guys take a look here, looks like it just broke that and pulled down into this gap fill, which never filled. I've been talking about that for multiple weeks and videos now, but it finally filled 164. And I would expect this to do the same thing, right? Over the next 7-10 days to have a push back up into this progression gap, right? Whether that ends up being a pop back all the way up to 174. Maybe it's a pop up here to fill the gap from the previous close, which is sitting here at this white line there, right? So what kind of percent would that be? I'm going from peak to trough to peak. So, that would be about a 4% move, and then it comes down, right? Something like this. However it ends up playing out. But that's kind of what I'm looking for, is like a little rally up into like 170, 166, 174.18 at the highest, and then that would be a lower high, and then it breaks down again, right? This is kind of what I'm expecting, just a market rally for the starting, I would say, this week, of course, but going into next week. So just a really, really important 2-week period here that I think we rally into 919. So, for NVDA and AMD, I'm just kind of letting these pop, move back up into not only the moving averages on the daily, but pops back up into those gaps, and just really key spots, right? You guys can even take a look. Like this 170.7, this red line, was this progression gap from back here. Once again, it was kind of an internal low that it bounced off of multiple times. It retested it for this three-day bear flag, but there is just a gap a little bit higher. So I'm giving it that flexibility. I want to see if I can pop up into these spots here. That's why I just have it marked as like a red box, and then seeing if there's weakness there. And then after OPEX, I want to be shorting this for a move down into like 160, and then potentially a bigger move down into 149 to 147. If that ends up playing out, boys, this is one for the books. This is a very, very nice, in my opinion, really prolonged distribution chart that's playing out here. I would expect it to breach back underneath these old highs here from back in November. And as I said, and I've been saying, this would just be one larger UTAT here on the weekly and or monthly chart. But yeah, NVIDIA's on the watch list here for a short. Just going to let this thing pop, hopefully over the next 2 weeks or so. Just trickle back up into 171 to 174. And then I'll be looking to trade this with 160 puts. And then same thing for AMD. If we don't see a gap down, right, let's say this thing gaps up, just going to be holding my position and just waiting for this to push up into either 153.75 to 153.12. So there's these two little green marks here. I probably should change these now that they're now resistance. Give me a second, folks. But yeah, just looking for a move up into this little pocket here. If it goes up a little bit higher, right, just looking for a move up into, there's two spots here, right? So once again, we can always just use these progression gaps as kind of like our gauge here, right here to here. Right, and then the rest of this doesn't really matter. The rest of this is kind of just off of my previous levels, so we'll extend this out a little bit. We'll go to like July, just have it there. We'll go red. This is the one thing I hate about having Thinkorswim as my charting platform. Okay, so yeah, that's where we'd look for a pop to. So the rest of this is irrelevant now. We can get rid of all this stuff here. We'll keep these lines still. I guess we can get rid of them. The rest of the chart doesn't really matter. So that's what we can have, right? That's what we're looking for. So whether this is just a short pop up into here, right? 153.75 to 153.12, or does it give us a bigger pop up into this little red box from 157 to 161? And then, like I said, right, I would expect a rally, up until this point here. So we could just draw a straight line by 919, then expecting a decline down in to fill this 145 gap. Or let's say, maybe a retest, that's another entry there, and then looking for the move fully to 138. Or best case scenario, right, is this gaps down, we hit our target, we can trim our position comfortably, and then we look for a pop back up into whether it's all the way up at 161. Kind of the same thing, guys. It's a rinse and repeat. So either we gap down, trim most of our position and then we, look for another roll and kind of let the market rally, or does this thing go up? And obviously I'd be in a little bit of drawdown on the current position I started on Friday. I'd still be green on the Decembers, but I'd probably close the current ones if I'm being completely honest. The ones I just started Friday, I would take a loss on those. And then hold the Decembers. I think that time frame's still good. I would just use the Decembers to add into at that point, since the contracts would be a little cheaper. And then same thing, right? Just looking for a pop up into that, or a weaker pop into 153. All in all, I'm expecting the market to pop. It's just about shorting that pop and where it will stop at, right? And looking for the move down into 146, and then the trade's not over till we come to 138. So that is pretty much that. Those are the main two I'm looking at. I really don't have anything else. I was kind of looking at Hood, right? So Hood's coming up here. I think that Hood comes down to 83. The S&P inclusion obviously set it up a little bit, so we'll see where this ends up opening up at. Had a nice little pop all the way to 111-ish. And then obviously at after hours it finished at 107, but a lot of people's interest is sparked in this one. A lot of people are probably going to be trying to trade it to the long side. So I will be keeping my eye on Hood, right? Just kind of seeing if there's a footprint candle here at the highs. I mean, if there is going to be one, this one's pretty damn close, right? So we'll just see maybe if we gap up or something like that. If it doesn't get above the 106 high, right? Let's say it gaps down and kind of stays around 107, which is where the close was in after hours. This could be an opportunity, but I just want to see where it opens at. But yeah, if the market ends up kind of rallying, right, there could be a spot trade here on SPY or QQQ. I will be keeping you guys updated on that just in pre-market, right? I'm not really doing nightly scans on this one just yet. We haven't closed above 650 either, right? 652 was the high. I said I would close this if we broke above 650 and closed above, and we haven't done that just yet. So I'm not closing those Januaries just yet, so we'll have to hold on to them a little bit longer, or at least I will. But yeah, if the market does rally on 9.8, I will be spot trading longs, probably on SPY with some shorter dated contracts, maybe like 1 or 2 week expiration, just targeting 919, and then riding the long side up, and then looking to short with AMD, NVDA once we hit 919, right? So that's kind of what not 919 price wise. I know people always ask me that because we're just looking for 919 the expiration, right? So that's pretty much it, guys. That's all I got. We'll see where the market ends up opening tomorrow on Monday, and then kind of taking it from there. If you guys didn't know, we have PPI coming up. We could just actually pull this up here really quick. Oh boy, that's bright. Yeah, let's take a look. Where is it at? Where is it at? I always forget on this one. Here we go. So next week, September 9th, right? You have payrolls. So Monday, typically no data, right? So we'll take a look if the market gaps up or it gaps down. No data, right? If we gap up, looking for distribution. Gap down, looking for accumulation. I would hope for a gap down, right? I kind of want this all to feed into my bias or what I'm planning for the week. So I'd want to gap down. I'd want to see AMD kind of bottom. I would take my position off for the most part, and then over the next 2 weeks, rally into 919, and then looking to short that. So hoping for a gap down Monday. If we gap up, yeah, like I said, I'll probably close the contracts on AMD I started Friday. Keep the Decembers, and obviously those would be from like 42% or something like that, 45%. They'd probably trickle to like low 20s. I would just add into the winner at that point. But yeah, non-farm payrolls, we have the revision on Tuesday, PPI Wednesday, and then CPI on Thursday, and that's really, really big, right? This is the last inflation print before we go to FOMC. So really interested to see if that is up, if it's in line, or it came down. This is actually going to be an important print here. I think it'll significantly impact the decision from the Fed on the rate cuts here. So going to be watching that, but this is the main driver. I would expect a lot of the volatility to be occurring on Wednesday leading into the close, obviously Thursday, and then Friday. So mainly trading on Wednesday, Thursday, Friday for me, especially if I'm going to be spot trading longs, right, or looking to buy any dips going into the OPEX on 919. It would probably be occurring on these 3 days, one of these 3 days. So yeah, that's really all I got, guys. Just really 3 names. It's AMD, which we've already charted. We already kind of know about NVDA. I'm going to be watching that, and then spot trades on SPY, QQQ. Ideally on the long side over these 3 days here, and looking for 919 expiration. I really haven't come up with like a, I guess like a strike or anything like that, but I know 919 is the date, and I'll probably be adding literally until the week of that expiration. Okay, so that's going to be it, guys. I hope everyone enjoyed. I'll catch you guys next time. Have a good rest of your night.